Firstly, Stephen, let's just focus on this Kumba and ArcelorMittal story. What's unfolding at the moment? We've got ArcelorMittal firmly at the bottom of the top 40, giving up 4.5% today. Where do you think this is all going to go?
Well, I think it's a case of ArcelorMittal throwing the ball very firmly into Kumba's court, and now Kumba has to decide whether to call ArcelorMittal's bluff. It's a very unedifying spectacle to have two leading members of the private sector fighting like this. I'm not quite sure whether to liken it to street fighting or a bar and brawl. Either way, you have to call the police, and I'm sure the parties don't want the government to have to step in to resolve the situation.
But surely the government may have to step in to resolve the situation if they're starting to fight it out in press releases at this stage, and the one is not going to supply to the other.
Yeah, it's going to have an impact on the industry. I mean, it is, as you know, it was said, it's major players in the industry. Needs to be resolved somehow or another. You hope that it will be done by the normal economic channels, but it becomes a bit of a battle there.
If we do see Kumba halting all supply to ArcelorMittal, what is the overriding picture for the South African industry?
Well, I think it's obviously a negative. I mean, they spoke about, I think, something like 3,000 job losses. And I mean, the closing down of a major export facilities is not something that the economy should tolerate. You know, already we're not optimizing our resource exports to the extent that we can and should. And so it's just not acceptable. I don't think the public will stand for it, quite frankly. So I think the parties have got one more chance to sort it out themselves before government does get involved.
But they've been trying to sort this out for some time now, and they obviously haven't reached any resolution. What do you think would be the best strategy to embark on? You must have looked at the situation.
No, I think they have to get around the table pretty quickly.
Johan, in terms of the broader industry and impact internationally, is it going to fold over onto the international stage, or is this going to be curtailed into South Africa?
I would imagine at the moment it's very much a local issue. We know that in the iron ore industry there's changes taking place with the pricing basis being shorter, going to a 3 months rather than a year basis, and expectation is that's going to have upward pressure on prices because they get changed more quicker. But the battle itself, let's hope it gets resolved here.
And if we've got ArcelorMittal at the bottom of the top 40 today, giving up that 4.5%, if we don't see quick resolution to the situation, what could happen to this share price? 72 Rand right now.
I don't think it's really pricing in the worst, to be honest. It's pricing in a lot of bad news, but the actual closure, I mean, the loss of income, the retrenchment payments, I don't think they're fully priced in, because actually I don't think the market really believes that that's going to happen.
If you are a holder of ArcelorMittal, let me put this question to you. What would you suggest you do as an ArcelorMittal investor right now, and you look at this share price coming under additional pressure?
Well, I think it's a little bit late to sell.
Let's move on to the broader commodity picture. We're seeing this big sell-off across the board today. It's on the back of the consumer sentiment number in the US coming out at an 11-month low for July. And there's concern over the growth prospects in the US and also over China, because we saw that slowing down quarter on quarter. Johan, where do you stand on the commodity basket right now? Is this the beginning of a bigger sell-off in your opinion?
No, I don't think we can say it's the beginning of that, but most certainly the tone in the market is not positive at this stage, and you get this sort of regular reinforcement of that. Previously the tone was very much negative with the whole European crisis. It seemed to have sort of softened a little bit, but most certainly over the past 2-3 days, news out of US, China, definitely a more negative bias to prices and negative pressure on base metals, your commodities that are affected by economic growth.
And then the big question, why is gold's safe haven status not kicking in? We saw gold dipping below $1,190 an ounce today.
Oh, gold is so difficult these days, because the same factor that drove it up yesterday drives it down today. I mean, you have growth concerns, so safe haven buying, yes. However, no growth, no inflation, so maybe not so good for gold. So it's very difficult to see where the price is going to go. We still think the positive sentiment is there. A $10 movement, whilst not nothing, is not huge in today's terms. ETFs are still just below their record highs. So very difficult to say what's going to happen there. But we're still bullish on gold, most certainly.
Stephen, let's bring you in here. Where do you like? We're seeing the corporate earnings coming through, beating expectations out of the US in the second quarter. We do know that earnings are obviously historical and they reflect the past, but we've also got this negative data flow. Do you think we're going to see CEOs starting to revise their forward-looking outlook statements in light of the data that we're seeing coming through in the US?
Well, if they're going to do that, they'll be doing that in the next few days. So I think they'll be talking about what they see on the ground, actually. One positive aspect is CapEx is picking up quite nicely in the States. And I think the jury's still out. Yes, there's huge talk about a double dip, but it's very common to have a soft patch after the first phase of recovery after recession. And that could well still be where we are.
Are you net positive on the equity picture then, as we stand?
Marginally, yes, but I think there is high risk.
I had Steve Bryce from Standard Chartered in studio last night saying that he sees a double dip recession on the cards.
No, I think that would be a strong statement. It's interesting to agree with Stephen here. We've had two base metal companies coming out with conflicting news. I mean, Alcoa was very positive on China. Norilsk, on the other hand, said, well, prices, they see drop in prices. However, they did say it's within seasonal norms. So, yeah, mixed bag.
And what about the China import story dropping 3 months in a row on copper specifically?
Copper price hasn't moved that much, you know. Copper is still sitting in the sort of 6.5 thereabouts. Clearly, it's going to have impact, and this reduction in the GDP is going to have also impact. But we do believe the demand is still there.
We've got Pat Goldrick on the line, the CEO of Cash Build. Good afternoon, Pat. Just bringing you into the discussion that we were having on Kumba and ArcelorMittal. Ultimately, you will be one of the businesses impacted if we do see Kumba halting its iron ore supply to ArcelorMittal. What is your stance on the whole scenario?
I'm absolutely shocked that two major suppliers of steel or steel-related products in South Africa can treat the consumer and the down chain and the economy like this. It's irresponsible of ArcelorMittal to allow this to fester. We are a retailer and we deal with a few hundred suppliers. And your relationship with your suppliers, you don't wait for 2 or 3 years or for contracts to expire before you start doing something with them. You review supplies, you review contracts, you review tenders on an ongoing basis. This has been allowed to fester, which is totally unprofessional. It's been brought into the market. It's after all the good vibes in South Africa at the World Cup, this destroys any business relationships that people can see of people people do business in South Africa.
Pat, I'm so sorry. We've got a very bad line this afternoon, but thank you very much for those thoughts. Just again, coming back to Kumba and ArcelorMittal, hopefully this doesn't unfold into a saga that impacts retailers such as Cash Build negatively. You've got to hope that there's going to be quick resolution on the table. And perhaps something has to come to the fore this evening, even, would you say, Stephen?
Well, no, I think it'll take a few days. The mere fact that they announced that they have decided to get around the table again might help. One of the reasons that ArcelorMittal gave for its action was that exports from its inland facilities would no longer be profitable at these levels. And I think what Pat Goldrick was saying was, and he's talking about the South African consumer, his concern is with the consumer. ArcelorMittal was with whether or not its exports would be profitable. I think the South African consumer is more interested in the price he pays.
Right, we've got Friday and the weekend, but we've still got the US trading session to unfold. A short while ago, we were down 1.5% on the Dow Jones Industrial Average, and the S&P 500 not looking in much better shape at all. What do you think the impact will be if we see a broad-based sell-off in the equity market? Do you think that sell-off is going to follow through to the commodity basket, as we're seeing now, just everything being sold off across the board, including gold, which is supposed to have that safe haven status?
It will most certainly have an impact, as we've seen, on your base metals specifically, and even on oil, although we do believe there's slightly different drivers for oil. Gold, very difficult to see. I mean, as we say, there's conflicting drivers there. Investor demand is key. So what is going to determine whether investors will keep on buying or not? If things go bad, you would expect safe haven to kick in. So a bit difficult, but most certainly commodities market do follow and have followed, the bigger equity macroeconomic picture.
Stephen, the strategy that you're embarking on in the mixed data environment at the moment, what would that be?
Well, I certainly think for the ordinary man in the street, the private investor, one of caution and maintaining relatively high liquidity and defensive positions. I think it's good to go for also to include in your portfolio long-term solid equities that are not correlated so much with international financial affairs. I mean, we've got some good examples here. I mean, you've got your ShopRite and Pick n Pay following it in its wake.
Are you also cautious ahead of the European bank stress tests to be published on the 23rd of July? I see Jean-Claude Trichet saying today that they're not expecting any catastrophes, but that the tests are going to be stringent.
Well, out of 91 banks, there are bound to be a few duds, and let's hope the European authorities have thought their way through this so that they decide what to do with the failed banks, because there have got to be some failures. Otherwise, this test will have no credibility.
Johan, I want to come back to a comment you made on the copper price, that we have seen a relatively stable copper price despite those Chinese imports dropping for 3 months in a row on the copper perspective. Do you hold copper as Dr. Copper? Are you watching that as a lead indicator for the general economic environment?
It is most certainly one of the more important base metals for sure, because it's used so much and reflective of the big base metal spectrum. Another one obviously is aluminium, also very much used in manufacturing, etc. Copper, the big story, it's been with the Chinese buying over the past 12 months has been very prevalent in the world's view. So copper is most certainly very important, yes, as a barometer of what's going on.
Just looking at aluminium, from that $2,400 a tonne level in May to $2,000 a tonne, and that's why Alcoa was surprising given the fact that we've seen a fall in the aluminium price. Where are we on aluminium at the moment?
It's a function of this, pessimism around the growth and the speed of the recovery, and is it going to happen, etc. The price fall was expected.